back. You're watching bnsn now on ET Now, where we get to answer for all of a stock-related query. We've spoken a lot about which all stocks are up on the buffet and up for grabs at this point in time. So in case you've missed that, very shortly it will be put up on our social media platform. So do go ahead and catch all of the stock recommendations given by Kunal as well as Rajesh, and I'm telling you, it is pretty mouth-watering and pretty lucrative when you talk about all of the stocks that they've spoken about. But let me continue taking this query then. Coming in from Pratisha, she's writing from Oman, and Kunal, she has Tata Motors in her portfolio, where she's suffering a loss in this one, a significant one. Should she hold on for a year, and should she look to average right now? What's your take about Tata Motors? This one was one of those most, sought after stock, let me put it that way. And now this one has seen maximum amount of correction.
Yeah, maximum amount of correction, and I think the one which started off from the Nifty 50 space, there were just about a handful of stocks which first started the phase of a very brutal kind of a correction. Tata Motors was one of them. The stock fell from 170 levels to now 600, 650 thereabouts, where it's trading right now. So it's a very sharp 40% plus kind of a correction for Tata Motors, and 7 consecutive months of negative downtrend for the stock. So that's also another indication of how brutal the correction has been for the stock. But that is not to signify that the stock is likely to make a bottom on an immediate basis. There is still no major evidence on the charts, relative strength scale study for the stock where it's found buyers or takers at current levels. That generally indicates that the stock should be in a process of at least another 3 to 6 months before it forms a formidable bottom for itself. And by that I mean the stock could probably get into a further leg of correction also. So there could be a phase where the stock may bounce back and then get into a further leg of correction and make a subsequent new low for itself. So I would believe that Tata Motors, you can hold on to the stock if you're a long-term investor, but buy, I would not suggest at current levels or to average out at current levels. I would look out for at least another 10% downside from current levels, say closer to 600 as a good starting point if you're looking to average further.
Alright, then that's a take coming in as far as Tata Motors is concerned. That one has been in the slow lane. But moving on, then the next one that we have, Rajesh, is coming in from Vignesh, who's writing to us from Bengaluru, wants to know about a couple of counters now. He wants to know if he can actually enter Infosys and Wipro at these current levels. What do you think?
See, the entire IT pack has been under pressure for quite some time because of Trump administration coming into power and all the kind of comments it has been giving. And secondly, due to AI and all, the business model of the entire space is going and under change. Valuations are great for the entire large cap names, I would say. They have strong balance sheet, debt free, giving good dividends. Some of the name one can have a look at would be Infosys or TCS, even Emphasis and Wipro, which the gentleman has selected, are good counters. But they are slow movers, I would say. A better bet would be either a Infosys or a persistent system or a HCL Tech that would give better returns in a smaller period of time. But even then, I would reiterate that Emphasis and the other one was he has chosen is quite good.
This next query that I have is coming in from Satya, and he wants to, he's been saying that even in this volatility, he's noticed that some of the stocks have remained solid and like a rock, like a wall apparently, and he wants to know out of those, some of these stocks that he's seen, which one should he look to stay put with? Indus Towers, Manappuram Finance and India Glycol. Which one should he actually look to invest in at this point in time? Kunal, on the charts, Indus Towers, Manappuram Finance, India Glycol, which one do you think stands out and makes sense for Satya to park his money, because he's of the view, and given the fact, yes, the proof is there in the pudding, given the fact that Manappuram, 31% up move coming in for the last 3 months, India Glycol, marginal fall when you compare it to the rest of the market, as well as Indus Towers also has held his fort. So what's your take?
So I think out of these 3, I would recommend Indus Tower as well as Manappuram. They are relatively more stronger, and I think Manappuram only for the fact that the stock is a little bit more volatile than the other 2. I think it keeps on getting into that news flow, and all of a sudden you see the stock falling sharply. So that's the only catch with stock like Manappuram Finance. But I think other than that, the recovery what we've seen post the sharp sell-off the stock had seen in 2024 from I think 200 levels to 150, 140 levels thereabout, and then the recovery or very slow gradual recovery from those 150 mark towards 200 plus levels where it's trading right now. So that indicates that a major pain seems to be out for the stock, and you could probably expect the stock to get back into a slow, gradual, consistent price uptrend. Industar also, I think, in a very similar light, the stock has done reasonably well. It's recovered quite strongly, been a stock which has seen a good relative strength with respect to its other peers. So I think at 330, 340 levels, Industar could also be a better buy.
Alright, and that's the take coming in as far as all three of these counters are concerned. The next one that we actually have is coming in from John Rajesh. He's writing to us about Bank of India, and he has 852 shares of Bank of India, purchased at a buy price of 107 rupees per share. What do you make of this one? Because he's saying that he can go on and hold on to this one for the next 5 years. But what do you think he should do?
See, 5 years is a pretty long period of time for a mid-cap name, but still Bank of India has been doing well. The numbers have been improved, asset quality has improved, one can continue to hold long. Keep a track on quarterly numbers that come every time, but at this point of time, I could say that valuations are very good. One can even add at these levels.
So that's the take coming in on those counters. Just the flashes on the bottom of your screen. As you can see, sources have told agencies that RBI is set to weigh more liquidity options. This due to cash crunch. What the sources are saying that the central bank has been struggling with a liquidity deficit, and they are considering changing the daily timing for calculation of the mandatory cash reserve ratio as requested by participants. This in order to help lenders manage their funds more efficiently. So this is what we're picking up from the wire agencies, source-based information that the RBI is now looking or weighing of options or more liquidity options, this in order of due to cash crunch. So just watch out for the banking names on back of that development. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, more stocks queries to discuss. Don't go anywhere.